Thank you, Faizan, and good afternoon to everyone on the call. On behalf of Equirus Securities, I would like to welcome you all to the Q1 FY21 earnings conference call of MSTC Limited. From the company, we have with us key senior management team, including Mr. Surinder Kumar Gupta, Chairman and Managing Director, Ms. Bhanu Kumar, Director Commercial, and Mr. Subrata Sarkar, Chief Financial Officer and Director Finance. Uh, Without wasting the time, I would like to hand over the call to the management team for their opening remarks, and then we can open the call for the Q&A. Thank you, and over to you, sir.
Yeah, good afternoon, everybody. I'm S.T. Gupta, CMD MSTC. With me are our Director Commercial, Madam Bhanu Kumar, and Mr. Subroto Sarkar, our Director Finance. We have declared our Q1 results yesterday in the board meeting held, and the detailed presentation regarding the earnings and the revenues will be given by our Director Finance. As everybody knows that this quarter is not very good for our company also, as is for the economy at large. Although MSTC is an e-commerce company and our operations or e-commerce servers were all running all the time during this complete lockdown or even partial lockdown, but the customers were not able to avail the services because of the restrictions for picking up the materials. So that is why the results are not encouraging in that sense. Similarly, for our subsidiaries, FSNL, which is primarily based on steel plants operations, so there also, because the steel plants operations were affected adversely because of this pandemic, so similar thing has happened there also, so their earnings have also been adversely affected. We all hope, we all wish that the things will get to normal very soon and the business climate has taken a beat, especially from the month of August. So hopefully we are expecting much better results in the second quarter and next 2 quarters for the current financial year. So with these opening remarks, I'll hand over to our Director Finance for the presentation on the financial results. Mr. Subroto Sarkar.
Good afternoon to everybody. As our CMD has narrated that it was a very difficult time, not for only our company as well as for the whole economy as a whole. So anyway, we tried to do at the best as we can from our side. So these are the certain highlights that I'd like to point out first. The operational performance of the standalone. So let us go to the volume. During the Q1 2021, the company crossed 57.43 billion in terms of value of goods transacted through its marketing and e-commerce vertical, which is 73% decline over the value of goods traded in Q1 1920. And accordingly, the consolidated revenue was 1017.93 million in Q1 as compared to 4854.14 million in Q1 of the corresponding period of previous year. So decline is almost 80%, largely driven by our degrowth in the marketing business, which was a conscious decision of the management. The PBT is 4.58 million in Q1 as compared to 453.54 million in Q1 1920. So in the business update part, COVID-19 pandemic and lockdown protocols have led to several disruptions during this quarter. Being an e-commerce service provider on infrastructure and facility front, MSTC was ready to provide the services. However, at recipient end, there were disruptions affecting both the turnover and the profit during the reporting period. Therefore, the performance of the company for this quarter is not comparable with the corresponding period or any period of previous year, because it's a very exceptional situation that is prevailing in the whole ecosystem throughout the world. The scrap auctions were also not much during the period, which actually forms a substantial part of our earnings. However, there were auctions for coal, timber and iron, but the volumes were quite less and giving us a less remuneration. In the meanwhile, we have taken up a new endeavor during this quarter. MSTC has taken up the auction for molasses for sugar units in Andhra Pradesh, which we want to as a project as a new type of auction in the coming days to come. Now let us come back to the standalone financial highlights of quarter 1 2021. The total revenue for the quarter 1 2021 is 341.70 million as compared to 399.95 million of quarter of 1920. Of this, the marketing stood at 116.20 as compared to 3495.76. E-commerce stood at 224.65 as compared to 503.32 and other 0.85 as compared to 0.87. EBITDA pre-provisioning was 83.36 as compared to 475.65. Provisions as per the provisioning policy that the company has taken from the third quarter of last financial year is 25.83 as compared to nil of the previous year. PBT thereby comes to 27.23 million as compared to 387.18 million, down by almost 90%. PAT comes to 2.53, down as compared to 251.93, down by almost 99%. EPS, of course, on the same front, it is 0.04 as compared to 3.58, down by almost 99%. Cash profit comes to 35.63 as compared to 255.74, down by 86%. And in the segment wise, if we go, the revenue from e-commerce is 224.65 as compared to 503.32, which e-auction commission was 181.87 as compared to 396.15, down by almost 54%. E-procurement was 16.5 as compared to 46.2, down by 64%. Other income 26.28 as compared to 60.97, down by 56.91%. Revenue for marketing, which was a very conscious effort and approach of the management to scale it down, is 116.20 as compared to 3495.76, down by 96%. And of course, PBT is 27.23 as compared to 387.18, and PAT is 2.53 as compared to 251.93. This is for our standalone part. And if we go to our consolidated part, the total revenue is 1043.69 as compared to 4915.43. Profit before tax is 4.58 as compared to 453.54. Profit after tax is a loss figure of 27.69 as compared to 290.77. EPS is of course in the negative part as compared to 4.13. But we have had a cash profit of 60.78 as compared to 229.78. And if you go to our summarized profit and loss statement, revenue from operation is 335.78 as compared to 3960.38. Other income is 5.92 as compared to 39.57. Employee benefit is 172.71 as compared to 168.10. Finance cost reduced considerably 23.03 as compared to 84.66. Depreciation 7.27 as compared to 3.81. Provisions, as already stated earlier, as per our policy, is 25.83 as compared to 0 of the last quarter. Other expenses 85.63 as compared to 55.58. PBT is 27.23 as compared to 387.18, and PAT 2.53 as compared to 251.93. Here, we would like to point out one thing, that these other expenses include 5 crores contributed by our company to PM Care Fund. So, actually, we have contributed for the benefit of the nation as a whole while maintaining our profit percentage also. This is towards our social responsibility and the greater cause for the nation. As compared in the consolidated part, revenue from operation is 1017.93 as compared to 4854.14. Other income stood at 25.76 as compared to 61.29. Employee benefit expenses 415.74 as compared to 438.07. Finance cost stood at 25.58 as compared to 85.68. Depreciation stood at 47.93 as compared to 38.51. Provisions comes to 40.54 as compared to 0. Other expenses stood at 439.39 as compared to 476.84. And of course, PBT comes to 4.58 as compared to 53.54. And PAT is a loss 27.69 as compared to 290.77. As a group, along with our subsidiary, we have contributed 10 crores to the PM Care Fund for the greater cause of the nation. And that's all from our side. And I would like to request Director Commercial to tell something about the highlights of this quarter.
Good afternoon, all of you. As can be seen from the results, it's not very encouraging, but this was in the lines of our expectation. We all knew what circumstances the businesses were facing, and our operations were not completely stopped at any point of time. But then the transactions were not happening just because none of our clients could operate anything, carry out any transaction in our portals. So that is probably the reason that the figures are not as good as it could have been. Secondly, there were too many restrictions on the movement of material, though coal and minerals were exempted from the category of exempted category essential services. But then the transactions were not happening because the businesses were still simply not there. But the silver lining is that the business has picked up to some extent in the second quarter. We are already about 2 months after the first quarter, and businesses have picked up. There is a ray of hope here. The iron ore prices have firmed up, the ferrous scrap prices, and overall steel market is showing signs of improvement. So we hope that the second quarter results will be much better. At least it will be at par with what it was last year. So that is an assurance that I can give about second quarter and for probably the next quarters, 2 quarters also. So there's a line of hope, and we have to live on hope now. Thank you.
So we now, this is all from the management side.
Hello, now you can take question answer, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Richa Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving this opportunity. Sir, I had a couple of questions. The first question was regarding your trading business. So we have said earlier that we're going to stop the trading business from August 2020, but there will be receivables pertaining to this business till September 2021. So I wanted to know, sir, have we stopped the trading business? And if yes, then why would we see the receivables of the trading business in our books till next year?
You see, we have stopped the trading business. Basically, we are not entering into any new commitments as of now. But whatever the receivables and these results, some figures you see in the results, these are out of the previous commitments that has been entered by the company. So this will continue for quite some time, but the rate of decrease is very large. If you see the figures comparatively, let's say quarter 1 19 to quarter 1 20, you will see there is a sizable downside. Even from the quarter 4 to quarter 1, quarter 4 of last year, quarter 1 this year, the figures are much less. So that is basically the strategy on which we are working. So, but these some figures will appear for couple of quarters more.
So let me supplement, madam.
Yes.
What is happening over here with the commitments are there, and there is a payment time also. So as already detailed in the presentation of our final Q4 of FY 19-20, we are told that we are referring to that this receivables will remain to sit in the balance sheet till September, at least till September 2021, because some of the suppliers are still being continuing in our associate model, and this will keep on continuing till December, January. So then that is the payment period, and I think we feel that it will be there till at least till September 2021.
Okay. So basically, we've completely stopped the trading business basically from August, but the receivables will continue is what you're trying to say because of the prior commitments, right, sir?
Yeah, that's
okay. Okay. So what would be the receivable amount right now pertaining to this business, and if you could give a breakup?
Basically, this only P&Ls are get reviewed. For this quarter. So and you will come to know the exact reviewed figure when we publish our balance sheet in the month of September. So wait for a couple of months, you will get the exact figure when we publish our reviewed balance sheet for the September half year.
Right. Okay.
But as CMD sir has narrated, and we are telling it will be as less as compared to March 31.
Okay. So, but can you give some color as it's going to be more BG backed or more on?
Yeah. Coming back to that, it is basically it will have the same proportion as of March 31. It will be mainly of the BG back and your associate model. It is backed by supplier guarantee. So basically it will consist of mostly secure portion than this unsecure one. Unsecure one, that is what we have maintained that it will continue to remain for some time of the same level as in the month of March that we have narrated to you.
Okay. Thank you, sir. So my next question is regarding the e-commerce business. Now I understand we have 4 models in e-commerce: selling agency, e-sell, e-procurement, and e-solution. So if you can give the breakup of different, the segment-wise breakup as on March 31, I think the total revenue from e-commerce was close to 200 crores. So A, if you could give me the breakup in terms of, different models, and B is, how much of this 200 crores is we can safely assume as a repetitive number or a repetitive revenue, and how much of it is like, event-based kind of a revenue going forward?
Madam, let me answer you one by one. First,
sure.
As such, so far accounting is concerned, we generally go by the client-wise accounting. So a client may offer us some this event-based. The same client may have some percentage-wise. So exact breakups is very difficult to say, but still we can say that almost more than 50% we are getting out of this e-commerce, and this scrap sale. Scrap sale becomes the
45%.
So around 40 to 45% we derive it from the scrap sale, which is basically on the percentage base, and others are also event based and mix of percentage base. So it's like around 50 to 60% of that maybe, because it's very difficult. We do not have that type of accounting over here. We go by the client billing basis.
Okay. So just wanted to understand, so on a repetitive or, on a future guidance perspective, how much revenue can we assume, will we have for a long term and not like a one-time kind of a thing from this model?
In fact, most of the revenue that we are talking about, in fact, I would like to correct you. Last year, the e-commerce revenue was about 183 crores, not around 200.
Okay, sorry.
So, out of that, about 45-46% is through scrap auctions. That is our major revenue earner. That is on percentage basis. And most of these agreements are on perpetual basis. Like, it's not any one-off kind of business. And in fact, almost 80 to 90% of it we have been having for more than 5 to 10 years now. The second thing, as far as the raw material sale, we call the e-sale, that more or less is on percentage as well as event basis also. But there again, the agreements are for very long duration, at least 3 years. So there also the business is there. The one-off kind of things happen, especially for the government projects, like the spectrum auction. That's not a perpetual thing. It is for a fixed price, fixed term, and it is event-based. So these are government projects basically, and for coal auctions, we are charging on event basis, but the agreement is for a very, very long duration. So it is like we have the business in hand, and the revenue streams are defined in the businesses itself, whether it's going to be event-based or percentage-based. But the business is going to be there for quite some time. It's nothing like, one agreement will carry out one event and then the business is lost. No. That's probably just about 1% or 2%.
Okay. So we can assume that, yes, sir.
I'll add to reply to your query. I'll add to it, as our Director Commercial has explained, most of the agreements, are long term, and the principals are normally renewing the agreement. Right? But there may be few cases, one-off cases, where the requirements are not there or the people choose some other operator. But nevertheless, if we lose one principal, we get two new principals also. So it, some churning out, as is a normal business case, will always be there. Some principals will keep on coming. Some will keep on going also. But by and large, our business is quite robust model, and it is giving the people are basically having faith in our business, in our e-commerce portals. That is why they are coming to us again and again repeatedly. Not only the government clients, even some few very big private clients also. Yeah, please.
Okay. And so just one more question, just a follow-up what ma'am was saying regarding the, spectrum auction and the coal auction under the e-solution segment. So what kind of revenue potential you think these auction, have? Can you give some ballpark number or some light on it, sir?
So it is basically revenues are depending upon the outcome of the auction. At this particular juncture, we are unable to tell how the auction will be successful, how much bid price will be there, and how much auction will get. But there are a lot of permutation combination are there. So it is very difficult to tell at this juncture how much revenue will garner. But it is a very prestigious auction so far MSTC is concerned, and we would like to do it, and we have already taken all the initiatives, and we are prepared for the final call from the respective ministry.
Can you give any ballpark range or, any number to it if possible?
No, at this moment it's very difficult
to tell. In fact, spectrum auctions, we are not looking at big numbers as service revenue. This was basically done so that, it is a huge challenging job. We took up this challenge. Secondly, because of this experience, we are, will be banking on it for our further expansion of e-commerce services to other clients also. So the numbers are not very big as far as spectrum auctions are concerned. Coal has been the mainstay of one of our e-commerce verticals, sub-verticals. So coal business will keep happening as long as coal mining happens.
Okay. And so just last question, if I can squeeze in. So what, according to you, is going to be the key driver in the e-commerce segment, going ahead, say for a 4 or 5 year perspective?
See, the initiative of the Government of India, the Digital India, where all the transactions which were being done on allocation basis, first come first basis, the sale of natural resources, now everything is happening on e-platform. So obviously that is a big driver for us. And since we have the requisite credentials, we are able to back those orders. So that gives us a lot of confidence to take any kind of assignment from the government or from any sector.
Right. Thank you, ma'am. I have a couple of more questions. I'll join back the queue. Thank you so much.
Thank you. The next question is from the line of Jeevan Patwa from Candy Floss Advisors. Please go ahead.
Thanks for the opportunity. So under your agency business, there are three type of business that we do. One, we were doing cash and carry business. Second was bank guarantee, and third was associate. So are we saying that we have stopped all three, or we have stopped only cash and carry business, and we are going to continue the bank guarantee and associate model?
Cash and carry has been stopped since last April itself. We have not entered into this business since last April, that is April 2019. So we had been continuing with bank guarantee and associate supplier. Even that has been stopped from this month onwards as committed in our last meeting. So there are no new engagements, no new procurement under these models also. We have stopped this agency, the trading business completely. We are just in the recovery mode. We are just trying to recover whatever receivables are there, and that will be the focus now.
Okay. And last call you said there was some 120 crore receivable in the cash and carry business, which may be you may have to write up. So any update on that?
Sorry, Mr. Patwa, your audio is breaking.
Process is still there. One of the clients has again gone to NCLT. So the legal processes are very long.
Okay.
We are just coping up with all the procedures that we need to. We are not sure as to what we will be able to recover from those processes. It's too early to comment on that. But the volume is that much only. That's the maximum that is under stake, 120 crores or so. Nothing beyond that.
Okay, great. In your annual report, you basically mention about two things. One is e-retail software, where you say that this sector holds a great opportunity and potential for MSTC in future. So can you just elaborate on this e-retail software, what you are basically talking?
Actually, so far what we have been doing is, preparing a lot of softwares and applications and hosting on our own server.
Okay.
So there were a lot of requests and requirements from our clients that, they can host certain software in their own environment, their own servers, or probably on cloud also. One such example is the online draw system that we have developed for the oil marketing companies, where selection of petrol pump and LPG dealership can take place. The entire data and everything is done on cloud-based servers. So that is the retail software that we are talking about. Apart from that, we do have a lot of internal applications that we are using ourselves. So the idea was to retail it so that our clients can also use the software that we are ourselves using for quite many years. So we'll probably be packaging and selling that as retail software. That holds a good potential. But then there are some challenges also. We are trying to address those challenges, and yes, going forward, we'll be focusing in that area.
Okay. And second, you talked about e-waste and solid-based management sector, which is a sunrise sector. So are you planning anything on the e-waste and solid-based management sector?
As of now, nothing is planned in that. Basically, we are providing the platform services, e-commerce services.
Okay.
Directly entering into that area, except whatever we have our joint venture for end-of-life vehicle dismantling. There also we are dismantling, and we are basically taking out the spares and steel and whatever components are there. There also we are selling to the authorized people wherever authorization, licensed people wherever licensing requirements are there, or we are selling in the open market the spares or the steels or whatever arisings are there.
Okay.
There also this e-waste for plastic waste, or let us say petroleum waste, there we are not processing. We are only selling it to such kind of licensed people.
Okay.
As of now, we don't have any business plan to enter into those areas.
Okay, great. And on the e-procurement side, can you just explain me how you see the potential on the e-procurement side? Because I think like currency, the note printing, I think we're using your reverse auction and e-bidding software. So you are.
Yeah.
No, I'm saying, can you use it as a software as a service? So can you basically give it on the SaaS basis, software as a service basis, to other government agencies to use it for e-tendering and reverse auction?
As on date, we are not planning to retail that. What we are doing is hosting all those software applications in our own servers, because this involves a lot of safety, security, and we have
to wind up staggerly. It is we are winding up our trading division. So the receivables are also coming down day by day, and as already pointed out during our phone call in this particular session, so the receivables will stay in the balance sheet till at least till September 2021 on this segment, and of course with a lesser volume. So volumes will be coming down. You can gradually see from the balance sheet itself that the trading segment receivables are coming down. Because during in the e-commerce segment, our receivables are in the line of around hovers around 60 to 80 crores. It will be between like that only, the figure, gross figure. And net figures is around 60 to 70 crores, it hovers around that. So balance is in the trading segment. So it is coming down gradually. You can go with the balance sheet results are published. You can see from that. So we also expect that it will again come down and ultimately it will wipe out from the balance sheet because we are closing down the stake segment.
And in the scrap recovery and allied jobs, what would be the receivable amount, roughly speaking again, in FY20?
Yeah, it depends upon the performance of the steel plant, because, in that it belongs to our subsidiary, Ferro Scrap Nigam Limited, and their clients are mostly steel plants. So it depends upon the situation of the steel plant. These are all secured and with the government steel plants mostly. To steel plants. So it depends upon the cash flow of the steel plants and how they are there in their cash situation. So it keeps on. It does not fluctuate so much. Of course, during 31st March it has gone up because of the COVID situation where the disbursal were not there. But it will again. We hope it will keep on depending upon the cash flow position of the steel plant.
So there has been no write back in the cash and carry segment this particular quarter. We used to have a small write back every quarter.
Write back. We didn't have any write back from the cash and carry segment.
Got it. Okay. And my second question is, if we do have a one-off, you did mention about the spectrum auctions that they would not contribute, in a big way. If we do have a one-off event-based auction this year of, let's say, 50,000 crores of spectrum traded, what is the ballpark amount of revenue that we would garner?
Yeah. You're referring to the spectrum auction.
Yes.
Yeah. So basically, it all depends upon the government policy when they are going to host the auction. And all, of course, depends who are the players, how much the price goes up. So ifs and buts are there at this sitting. And we have already been selected as a service provider. We are ready, almost ready with the preparation and all these things as per the government guidelines. So as soon as the government gives the green signal that they are start the auctions and everything. So it's very difficult at this juncture to tell and project about the revenue stream from that particular thing. Nevertheless, we are eyeing this project as a flagship project to have a role model, a new type of model, and have future business in this area.
The revenue could be just that a sort of a registration fee, or could it also be dependent on the amount of the spectrum traded? What do you think? I mean, I'm trying to bifurcate the issue there.
Event basis, and it is very, very minuscule. For carrying out an event, we are not really going to be paid very highly. This is more of a prestigious project for the government of India, and we are doing it almost for free.
Or it will be a rupee one kind of thing?
Oh, that's of course, this is between the agreement between the government of India and of PSU. So of course, what our director commercial means that we are not eyeing any much profit from out of this project as we used to have.
This is more of a, it will give us more mileage for future business. But this asset is not a revenue earner for us.
Got it. Thank you so much and all the very best.
Thank you. The next question is from the line of Deepak Poddar from Spark Capital. Please go ahead.
Hello.
Yeah, please.
Yeah, thank you very much, sir, for the opportunity. Now, sir, I wanted to understand first on the e-commerce business, like over the medium term. So, what sort of scalability or the revenue potential you see in the e-commerce? So, basically, just wanted to understand the opportunity size for us in the e-commerce over the medium term, let's say next 3 to 5 years.
So, as we were also, telling during our road shows and of course interaction with you people during the last year and plus year and a half. So, the potential is very, immense potential the business has. But as during this, the introduction during this session, our director commercial has pointed out the revenue has not been mapped. It's a very unorganized sector till date also. But it is going to pick up because of the government's endeavor for Digital India and do all the transactions through digital means. And of course, the advent of GST and etc., where all the transaction has to be routed through certain particular channel and digital channel. So we feel that in the medium and of course long term also that this e-commerce business and that to this scrap. And scrap, so long as the industry grows, the scrap will keep on growing. And how they will say they will have to sell through digital means. So, of course, this has got a positive potential and we look forward like that only.
Okay, can you quantify anything like 200 crores? Would you want to reach like 500,000 crores kind of a range?
Again, I go back to our director commercials proposition. This resources mapping is not there. And it is very difficult to sell, say sitting at this point of time, what will be the quanta of that. But one thing we can always say that of course there will be a good amount of revenue churning out of that.
I'll just add to that. In fact, in our road shows, we had been saying that e-commerce revenue has grown by about almost 10 to 15% in the past. And we were expecting that kind of a growth since last year after the IPO. But then this pandemic happened and it has put a big spanner on everything. We have to start from almost zero growth for the last year and take it forward. So that is the kind of trajectory that we are already on. But this kind of situation was not expected. So what future holds for us, we can't even predict now.
Okay, fair enough.
This has given us a very big jolt actually. Otherwise, we were very confident that we grow in the same pattern.
Understood. Sure. And my second question is related to your cost structure. Now, since your trading business is kind of, you're stopping the trading business, so there must be some fixed cost that would be associated solely with your trading business. So just want to...
There are no fixed costs, there is no segmentation of fixed cost. It is all basically our employees' remuneration and some administrative overheads. So whether trading business or e-commerce business exists or not, the costs are going to remain the same.
So basically in FY20, my employee cost and other expense, other overheads.
Almost as we were kept on telling that for MSTC around 100 crore, it keeps on fluctuating on that range also. So it remains constant for a particular scale of auction, in which area we are now operating. So it will remain. So if we go beyond that, of course we will have an advantage and we will earn profit.
Okay, so even after like trading business, we are not doing any trading business. Our fixed cost, let's say employee cost and other overheads, will be close to 400 crores, like what we reported in FY20 going forward.
400 crores. Where from you are getting?
It's employee cost and other expenses.
No, that is 100 crores, less than 100 crores.
Employee cost, if you talk about the group as a whole.
As a whole, consolidated basis.
Of course, I got your point. If you go by the group also, so employee cost is around it is around 180 max to max.
180 crores. Yeah.
So and other costs are if you take 40 crores, 2 and 20 crores and all these things.
Correct.
So this almost is a constant factor. I mean, it is fixed on employee cost. Some people are retiring, some are being recruited. It's almost hovering on the same pattern. If you can see that, except for some jump in 2017-18. Where some provision has to be made for the change in the wage revision. So that part is also over. So now it will hover around this figure only.
Thank you. Mr. Poddar, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. We'll take the next question from the line of Dipen Shah, individual investor. Please go ahead.
Yeah, thank you for the opportunity. So just continuing with this expenditure discussion, in the current quarter, what we have seen on a standalone basis is that while the e-commerce business revenues are 22 crores, the expenditure is also 22. But there is another unallocated expenditure of 25 crores. So what according to you should be this segment? Like this will remain at 25 crores per quarter irrespective of whether the...
Again, going by that, in the standalone basis, we have got an overhead of around 100 crores, employee plus other expenses. Okay. So almost it remains the same range with the scalability of operation, and we hope this year it will be also on the same range, it will hover around.
Okay.
Leave apart certain abnormal something which will happen, is not.
Okay. And going ahead, say apart from the telecom auctions, we have got also the coal auctions which are probably coming up in the September to December quarter period. So on in that also it will be our revenues will be more on a commission basis, or it will once again be event based where we will get some fixed fees.
I think you are talking about coal block auctions, right?
Yes, ma'am. Yes.
Yeah, that is on event basis and on successful event basis. Suppose the coal blocks, there are no takers, we don't get anything.
Thank you.
So whether the coal block auction is successful or not, that will determine the revenue stream. And that is on event basis.
Thank you, Mr. Shah. May we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Rushabh Shah from Equirus Securities Private Limited. Please go ahead.
Yeah, thank you for the opportunity. So I think two short questions. I think first on the part of Jaivik Kheti portal, what we were talking, I think for the last 2 quarters. So how is the things going on that part?
We have, I think in the last meeting also said that we have joined hands with India Post for the last mile connectivity. We are in the process of empaneling more logistics service providers. See, unless logistics is there in place, this B2C kind of a portal will never take off. So we have tied up the loose ends now, and hopefully the transactions should take place within this year. I won't say within this quarter or next quarter. Within this year, it should be we should be able to carry out transactions. Next year, it will be a good revenue earner for us.
Okay, so just any ballpark, maybe not the figure I will be asking, but how the opportunity maybe would that be a very big amount, or maybe just a small minuscule range for us?
We are not expecting, because this is basically for the organic sector, and the organic consumers are a little niche consumers. So that is not a big volume. So initially we are not targeting very high transactions here, high volume of transactions. But going forward, yes, the focus is in that area. So
perfect.
Institutional buyers will be probably roped into this.
Great. And the last question would be, I think so as receivables will be starting maturing, and I think so the cash inflow would be very strong for the company. maybe 1,400 crores even if we make some sort of receivables matured in this year, I think the cash balance would be much, much higher. So are we planning how to utilize or how will we planning on that cash proceeds?
So basically, as of now, we are concentrating on whatever debt we have to reduce that thing. That is our main motto. So we basically, if you see the balance sheet of 31st March, there are certain cash balances are there, their debtors are there, but at the same time, some trade payables are also there. So we want to settle the creditors also, and we want to reduce our debt also. So looking forward, depending upon the cash flow, of course, it will depend on the 30th September number. So once we 30th September, we have numbers in the balance sheet, so we will plan accordingly. But the basic philosophy will be like to reducing the debt and the creditors.
Perfect. I think that's all from my side. Thanks a lot, sir.
Thank you. Ladies and gentlemen, due to time constraint, we'll take that as a last question. I would now like to hand the conference over to the management for closing comments.
So thank you very much for our patient hearing. We hope that we will be keeping your aspiration for running the company, and we will get the support of all the stakeholders to come forward for a better result. That's all from our side. This is Subrata Sarkar, Director of Finance from CFO.
Thank you so much. I'm really happy to note that you have been following up the activities of the company so closely and remember each and everything that we say in our meetings. So that gives us a lot of confidence that you people have reposed on us. And thank you for all the support.
That's all from our
side. Thank you.
Thank you.